Good day, my name is Jelben Vergara-Sino, BSc Agronomy Section A. My presentation about measuring economic activity. What is the domestic product? Gross domestic product is the name given to the total market value of the final goods and service products produced within the national during a given year. It is the figure you get when you apply the measuring rule of money to the diverse goods and services, from apples to jitters, that a country produces with each land, labor, and capital resource. Low product approach. Each year, the public consumes a wide variety of final goods and services. Goods such as apples, computer, software, and blue jeans. Services such as healthcare and haircuts. We include only final goods ultimately bought and used by consumers. Earning or cost approach. The second and equivalent way to calculate gross domestic produce is the earning or cost approach, equivalence of the two approaches. Now we have calculated GDP by the upper law of product approach and by the lower loop earning law approach. National accounts derived from business accounts. You might wonder, there on earth economists find all the data for the national accounts. In practice, government economists draw on a wide array of sources, include surveys, income tax returns, retailer sales, statistic, and employment data. The problem of double counting. We define GDP as the total production of final goods and services. A final product is one that is produced and sold for consumption or investment. GDP includes intermediate goods, goods that are used up to produce other goods. GDP therefore includes bread but not wheat, and home computer but not computer chips. Real versus nominal GDP, deflating GDP by a price index. We can measure the GDP for a particular year using actual market price of what current price, but we are usually more interested in determining what has happened to the real GDP, which is an index of the volume or quantity of goods and services produced. Investment and capital formation. So far, our analysis has banished all capital. In real life, however, nations devote part of their output to produce production of capital. Durable goods that increase future production. Increase capital requires the sacrifice of current consumption to increase future consumption. Net export. The United States is an open economy engaged in importing and exporting goods and services. The last component of GDP and an increasingly important one in the recent years, it is net exports, the difference between export and import of goods and services. And that's the end of my presentation about measuring economic activity.